We're joined as well today by Mona Mahajan. She's the U.S. investment strategist with Allianz Global Investors, here to join this part of the conversation. It's good to see you. Thanks for being here. Growth tech. I mean, there's notes out today saying stay away. What do you think?
You know, growth has done phenomenally well since the crisis, and there are a few reasons for that. One, low rates. So in a low rate environment, these growth tech names in particular, they're long-term stories with big terminal values, and they're being discounted at low rates now. The second reason, slowing growth. So in a slowing growth environment, you're looking for growth. Growth tech is a perfect area to hide out in. And then finally, low inflation. In low inflation environments or inflationary environments, you get PEs that can be extended, can be stretched. We've certainly been seeing that in some of these FANG names. Going forward, can that shift? Will the last 10 years look like the next 10 years? Maybe not. What we're looking for in terms of inflection points is actually a bottoming of the PMI story. One thing we've seen more recently is yield curves starting to steepen. And then earnings this year have been actually okay, this quarter in particular, starting yesterday. So we're actually looking for that inflection point. We think it's a bit early. We continue to like some of the long-term disruptive growth themes. I think companies like an Amazon in AI, in cloud, in cybersecurity can do well longer term. But we're starting to warm up to that value story.
So how about this notion, right? SocGen today, stay away from growth component in U.S. equities. Pete just puts forth, you know, I don't like these stocks. I like the Cisco's, Intel's, Microsoft's, you know, maybe some others as well out of that spectrum. Which is going to win out over the remainder of the year, growth or value, when it comes to tech?
I still think growth is going to win out when you're looking at tech specifically. I've avoided the FANGs specifically, maybe a couple in and out of Apple, but I've avoided FANG, and I've stayed in the type of tech names that Pete's talking about. I think it's important in the muted economic growth environment that we are in to understand you're going to pay a premium for a company that's got strong free cash flow, a lot of cash on the balance sheet, reliability in its earnings, and high margins. Value is going to work best when you're in a recession or you're actually getting economic growth that's exceeding 3%. I don't know if you've got any clarity or visibility on each of those conditions occurring. I think it's a muted environment, and that presents itself as you go right back to tech.